So there's growing anxiety in the stock market for a number of factors, including high traditional valuation metrics, the avalanche of SPACs and IPOs, and a number of unprofitable companies that have charged ahead in this bull market. In fact, there are more than 200 unprofitable companies whose combined stock market value now is $2.5 trillion. That's 300% higher than 2000. As a result of this anxiety, the air is coming out of a lot of fan favorites, including stocks held by Cathie Wood, stay-at-home favorites, cryptocurrencies, and those at the forefront of the Reddit investor revolution. What's happening in this market, though, folks, is not unusual. These periods happen after major run-ups, and just like the upside is a reflection of emotions, mostly FOMO, the downside is a test of emotions, fear of being the last person holding the bag. These result in overbought and then oversold conditions. How these stocks find equilibrium, well, it varies, but it's rarely from Wall Street analysts all of a sudden changing their minds, even when a stock has been hammered. Now, stocks generally stop going down when the sellers dry up, which means the emotional holders have been shaken out. This week's selling in Reddit names has come in part to bad news and developments. AMC under pressure after we learned of those strong Black Widow sales on Disney+. GameStop under pressure this morning on news that Netflix is going to build out its video game operations. And, you know, it's right there. I see some really delicious irony for this because, you know, I would come on this channel all the time for years and say I like Netflix, and every single person said I was crazy and wrong. I'm talking every single person for years. That was the general consensus when it came to Netflix. In fact, take a look at this headline on CNN Finance. April 22nd, 2010. Netflix soars past 100. Time to sell? Netflix stock skyrocketed past $100 a share Thursday, a day after the company reported another phenomenal quarter. But many analysts are skeptical of the lofty share price. The company's stock price has doubled in less than 3 months, with shares soaring 15% to $100 Thursday. Of the 32 analysts covering Netflix, only 10 have a buy rating, 15 say hold, and 7 say investors should be selling the stock. Well, guess what, folks? It's up 3,546% since this article. Now, I'm not saying GameStop or AMC or Netflix, but what I am saying is that Wall Street just doesn't always get it right. I've seen it happen over and over to dozens and dozens of companies that were written off and went on to do very big things. Joining me now, host of Trey's Trades on YouTube, Trey Collins. And Trey, you know, first I want to get a feeling of how you're feeling, right? The current pressure on AMC, a lot of people are looking to you. How are you feeling and what are you saying?
You know, Charles, I come back to essentially the why behind the trade. I think there are 3 main things that kind of drive this overall, you know, trade over. It's the apes. You've got shorts that have not covered positions. You've got a bunch of systemic problems within the stock market that people are just flat out angry about. And none of those 3 factors have changed. You throw on top of that essentially this overselling territory where people are being fearful. And my hypothesis is when people are fearful, you need to be greedy. I view this as a buying opportunity and not as a bag holding opportunity.
How do you pick a level? In other words, earlier in the week, it broke under the 200-day moving average. Generally, that's when all hell breaks loose. Are you looking at certain levels, or are you just saying in your mind at these levels, period, it's oversold?
You know, it's funny, Charles, because I actually made a video about a week ago on my YouTube channel calling out that this would essentially fall back down to about $32 to $34 sometime in the near future. It was short-term bearish. I'm not an unrealistic person. I recognize that stocks can't always go up. They also go down. So right. I called out that $32 to $34 level of support just based on previous trends over the last 6 months of trading. And sure enough, it bounced right off that $32 level and then back up to essentially $37 today. Up about 2-3% at the moment, but it seems like so far, knock on wood, that was a pretty decent support level in order to get a good buy-in.
It was a good call. It was a good call. Hey, Adam Aarons, he shelved an offering. Mostly, he says, at the request of the investing apes. I know folks were worried about dilution and the stock going down. It's gone down anyway. So do you think in hindsight that's a mistake, that they should be trying to raise money?
You know, Charles, Adam Aarons actually come out publicly in a legally binding document and stated, even if this was to pass, we cannot use a single one of these shares in 2021. They're shelved until 2022 anyways. So for him to essentially pull it off the table, I think what that did was take away some of the FUD, the fear, uncertainty, and the doubt that the mainstream media likes to essentially paint around AMC stock. I actually heard you say this once upon a time. It was no matter what came out, they try to spin it as some sort of negativity. And I don't view it as negativity in the least bit. I think it's just him reading the audience. He recognizes that 80% of his company is not comfortable with that for the time being, and it doesn't affect him in the next 2, 3, 4, 5, 6 months.